Today's breaking news focuses on a dramatic shift in U.S. trade policy as President Trump prepares to enforce substantial new tariffs on key imports. Effective March 4, 2025, these tariffs target all imports from Canada and Mexico, implementing a sweeping 25% tariff across the board. In addition to the broad import tariff, a focused 10% tariff will specifically affect Canadian energy exports, intensifying the trade disruption further. The administration justifies these measures by citing serious concerns over undocumented migration and the escalating crisis of fentanyl trafficking into the United States. Despite concerted efforts by Canada and Mexico to address migration and drug trafficking issues, President Trump insists on more stringent measures to protect national security. Economists warn that the newly announced tariffs may lead to higher consumer prices, reduced economic growth, and increased uncertainty in the financial markets. Critics of the tariff policy argue that such measures could inadvertently reignite inflation, potentially triggering prolonged periods of high interest rates throughout the economy. This policy shift comes at a time when the U.S., despite being the world's largest oil producer, still relies heavily on Canadian crude oil imports. In 2022, Canadian suppliers provided approximately 60% of the 6.28 million barrels per day of oil imported into the United States. The implementation of these tariffs could directly lead to higher gasoline prices, particularly affecting consumers in regions dependent on Canadian oil. Analysts predict that the price at gas pumps could rise by an estimated 10 to 25 cents per gallon over the coming months. The business community has expressed mounting concerns that these tariffs will not only drive up costs, but also slow down overall economic activity. Some major companies have already announced plans to absorb the increased costs, aiming to shield consumers from immediate price hikes. President Trump's tariff strategy reflects an aggressive approach intended to significantly reshape trade relationships and address long-standing national security challenges. Political analysts note that this move is a calculated risk aimed at forcing renegotiations of existing trade deals with North American allies. This policy decision emerges amid heated debates in political circles over the balance between economic interests and national security imperatives. Diplomatic efforts are now intensifying, as Canada and Mexico scramble urgently to negotiate terms and possibly avert the impending tariffs. Both nations are reportedly considering a range of retaliatory measures that could significantly escalate ongoing trade tensions in North America. This rapidly unfolding scenario is causing considerable uncertainty among prominent investors and market experts regarding the potential long-term economic consequences. Commerce Secretary Howard Lutnick has stated that final tariff levels remain under review, with President Trump expected to confirm details shortly. Sources indicate that President Trump will make his final determination on the tariff measures later today, setting a pivotal moment in trade policy. The current administration's approach has ignited a fierce and ongoing debate among prominent lawmakers, economists, and international trade experts alike. Political commentators stress that these tariffs could reshape not only economic policies, but also the broader geopolitical landscape of North America. Many experts remain skeptical, arguing that the potential economic fallout may extend beyond immediate trade disruptions to affect global markets. Observers note that the decision clearly highlights a broader shift towards prioritizing security measures over traditional free trade principles in policymaking. Industry leaders are bracing for the potential shockwaves, as trade policies of this magnitude could fundamentally alter market behavior and investment patterns. In recent months, the political landscape has been charged with debates over balancing economic growth with rigorous national security protocols. The Trump administration's actions clearly reflect an unwavering commitment to reassert American economic strength and enforce border security measures effectively. Critics caution that these tariffs might ultimately backfire, severely harming domestic industries and consumer confidence while straining critical international alliances. Supporters, however, firmly contend that the tariff measures are essential for safeguarding national security and curbing rampant illegal cross-border activities. Market experts and policymakers are closely monitoring these developments, aware that the decisions made today could reshape future economic policies significantly. As the situation continues to evolve, all eyes remain fixed on Washington, where the next steps in this high-stakes trade battle will be revealed.